Hi everyone, let's go through my low time frame and micro Elliott Wave scenario, starting with this scenario over here where we are looking for a move to the downside in a wave A, followed by a corrective structure for then eventually a continuation to the downside. In this particular scenario, we are then thinking about a W3 wave in the X and then eventually a wave Y to the upside. However, this wave Y is starting to take quite a little bit of time. You definitely want to see wave Y moving towards the upside because it is already much longer than a wave W, and usually a wave W and a wave Y are related in time and price. But if we at least look at the longest wave, which would then be a wave X, and we take the time of wave X and we compare it to the time of wave Y at the moment, it still has a little bit of breathing room, as the 1-to-1 of this wave X compared to then wave Y is over here, and we didn't reach it yet, but it doesn't make it very pretty. Now we do have some bullish divergences on the CVD. Price made a higher low, but on the CVD we actually have a lower low, and you can see that on the CVD chart over here, a higher low on price, but on the yellow and the blue line we have a lower low, and therefore the target for these bullish divergences is actually the high over here at 30k. So that is something to look out for, and just above this high we also have a target box that has not yet been touched between 30.2k and 30.4k. Now the invalidation of this scenario, because this would then be a three-wave structure like this to the downside, is basically taking the high over here at 31k. So that is something to look out for in price if price is going to move impulsively to the upside. Now I do want to talk about this triangles. Yes, there we go. So I've seen many triangles, and there's a couple of rules that I think are very important for triangles in general for people to know, because sometimes a wave structure might look like a triangle, but it is about the lower degree waves inside the triangle that decide if it is a triangle or not. So even though price might form by the looks of it a triangle, it might not be a triangle. And also triangles are incredibly complex because of the results. So let's have a look at what I have in front of me, right? If this is a triangle, and I've really done my best to actually make a triangle over here, then we have a zigzag in a wave A, a zigzag in a wave B, a complex structure in a WXY, and then a wave C with a running triangle, which is actually quite unique in a wave X over here. Then we have a zigzag in D, and then this has to be a zigzag in a wave E. So it needs to be an ABC structure. Why? Well, 4 out of the 5 waves need to be a zigzag structure, which is an ABC. So it's a 5-3-5 wave move. 4 out of the 5 waves in a triangle need to be a zigzag structure, and only one of the waves is allowed to be a complex structure. Usually the complex wave is either a wave C or a wave D, and in this scenario, in the one that I have in front of me, it's a wave C. Now in this scenario, this is then a wave A or W to the downside, followed by a B or X triangle before continuation. So a triangle can only exist in a wave X, in a wave B, in a wave Z, in a wave Y, or in a wave 4. These are the only places in which a triangle can be formed following the Elliott Wave rules. So if we have a wave A, either 5 waves to the downside, or this is a 3-wave structure in maybe a W, then this structure over here is a B or an X before then continuation to the downside. So the triangle is a corrective pattern in eventually more downside to come. In this particular scenario, you do not want this wave E to go above A or C, because then it invalidates this triangle. And you do know now we do have some bullish divergences where the target is the high of wave A, but if we look at this triangle, you do not want to see that play out, right? Because we want to see downside after wave E is in. However, another potential is that this triangle is all the way then extended, and I've seen this online as well, all the way extended to the left. So now we have this as then a zigzag structure in a wave A. Actually, let me remove the green count to not confuse you over here. So then this is wave A, B, C, D, E. It is not pretty at all, but yeah, like, okay. So when we talk about this triangle over here, this wave A, first of all, is then massive compared to the rest of the structure, which is not something you really like to see. And also in a triangle, another important rule is that usually, and by far most commonly, volume tends to go down while the triangle is actually forming. And you can see that if this is the first wave and this is then the second and the third, The third wave has a very, very high amount of volume. Basically the wave C, right? If this is an A, B, C, this C has a high amount of volume, not really something you like to see. So if we think about this triangle, this one is a bit more likely. Even though wave B has a high amount of volume, it's at least still relatively at the beginning of the triangle, after which in the rest of the triangle, you can see volume going down. However, if we think about this scenario being a very, very big triangle in an A, B, C, D, E, A, B, C, D, E, you are now expecting price to move to the upside and you do not want to see these lows taken. So in this scenario, the bullish divergences then are going to play out and we are going to move towards the upside. And if I then zoom out to the 4 hour, because we have to think about this, if this whole thing is going to be a triangle in an A, B, C, D, E, then what can this structure be part of? What can the triangle be part of? So A, B, C, D, E, let's keep that on the chart for a second. And you have a bit of a triangle over here, right, like this. So as we know, a triangle is only allowed to be in a wave B, X, Y, Z, or 4. So this is then most likely going to be some sort of a wave 4, where if I zoom out, we then have this as then a wave 1, 2 at 19.6K, 3, triangle in the 4, before then a continuation up for 5. So that is a potential. Again, it's not pretty, but it is something we at least have to keep in mind. So yeah, very, very complex structure. Triangles in general are quite complex structures because they have so many different wave counts. Like it can be a B, can be an X, can be a 4, can be Y, Z. Not easy. And then of course, if we look inside this triangle, this wave E has to be a zigzag as well. So if this is the triangle that I have in front of me, if this is an A, B, C, D, E, then currently wave C is a complex structure, and we know 4 out of the 5 waves in a triangle need to be a zigzag. So you're only allowed to have one complex structure, that is then this wave C in a WXY. So this has to be an ABC for then an ABC, right? Like, not easy. So at least I shared my opinion and I shared the info. I know it's not like too clear, but that's also because you know, the triangle is not looking that great. It might be a triangle, but very, very complex structure going on over here. So if we then very quickly at least zoom into the micro timeframes and quickly run through the different scenarios, as the video has to go online, looking at this potentially in a impulsive structure in an A, even though this wave 4 is very, very short, this is not the nicest scenario by far, but we have then a 5-wave move in A, 3-wave B, and then another 5-wave move in a wave C. So we have a simple zigzag over here and then a W. Looking then for a 3-wave in a wave X, could already be finished as price bounced on the 382. However, this structure by itself being a wave X doesn't make it very, very likely. This also looks like an impulsive structure for then an ABC. However, price took the high over here of the origin of this impulsive structure, so it can't be a zigzag anymore. So therefore also this wave X, this has to be some sort of a 3-wave structure for this to still be part of a wave X and then a 3-wave like this. So yeah, it's not the prettiest count that I have over here, with then wave X still gonna end or wave X already ending here, unless one counts a zigzag structure in this impulsive move. However, that is very, very difficult on the lower time frame. Another possibility is a WXY and then a WXYXZ, so a WXYXZ. And usually the volume should die down as the pattern is like moving to the upside in this scenario, but we can also see over here high peak of volume, but it's also actually because of the news that we had over here. So yeah, one might be able to remove this volume and then it looks a bit more like a little bit better, basically price moving up, volume then going down. So this is a scenario that I do have in mind, where the high of Z might then already be in. It reached a rare target for wave Z, the 0.618 taken from the low of W to the high of W to the low of X. And all the other targets are absolutely fine. X 0.5, Y at the 1-to-1, which is what you want to see. And this X at the 0.5 as well. So very complex structure going on. And then the bearish scenario is this being an A or 1, B or 2, and then continuation down. If this, however, is a WXYXZ, as I have just shown, it is more likely it's a wave B. The bearish scenario is invalidated if we take this high. So actually on the lower time frames, I don't necessarily have too much of a preferred scenario as well. I do have a target box down here between 28.2K and 28K, so that is at least something to take into account. And also, if this move to the upside was going to be some sort of an impulse and then a 1, 2, 3 4, 5. Well, kind of invalidated already. So first of all, if this is a wave 1, 2, this wave 2 is incredibly deep, going to the 886, which is a rare target for a wave 2. If this is then some sort of a wave 3, then wave 4 is not allowed to retrace below the 0.5 usually. And if we pull a fib from the low over here to the high and the 0.5 is on, you can see candles have clearly closed below the 0.5. So it's also not a 1. So it's also not a 1, 2, 3, 4 and then 5 anymore. And therefore possibly downside becomes more likely. And if we then actually look at the CVD divergences that we have very, very locally on the 15-minute, this video is going to launch a little bit later. That's because of the complexity and stuff. But in this particular scenario, yeah, after the wick was in, price created bearish divergences over here, price making lower highs but higher highs on the CVD. And even though again we create some lower highs, but look at the CVD, look how massively it goes up all the way, and it's again higher than the CVD that we had at this wick over here, as you can see. So yeah, some bearishness going on very, very locally. Doesn't look too bullish at the moment, but yeah, we have to wait and see what price does. So it's not the clearest update, but I still hope that it was valuable or helpful to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.